This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. It is Friday. It is a fun Friday. It is time to check in with all of you just to make sure that everyone has that clarity that is needed. And besides, I miss you all like you wouldn't believe. Always do close to the heart. What else were we going to get going over here? Well, let's just get into it. That's right, Kenny. The markets are not crashing. They could be correcting. They certainly are correcting. A lot of people are definitely off sides. And then, of course, CTM, either on the sidelines, neutral, buy side only, in a position of power, and or riding the shorts. All right, let's take a look across the board. We're going to start over here, and obviously we're looking at the 4-year cycle to begin, right? And a couple of things that we notice about the 4-year cycle is that this particular cycle right here, the previous one, was different. It was different in the magnitude of what was the blow off or non-blow off top. And it was also different in the magnitude of drawdown, which was 76, 77% instead of 84 and 85%. And it was different that the all-time high was made prior to the halving, not after the halving in prior cycles. So this cycle here had 3 things that were very different than the previous 2 cycles. This current cycle that we're in right now, you can see that. We also see that this cycle here, ever since breaking above the 0.786 retracement fib, in the past, price has then pretty much soon thereafter shot up into a blow-off move. And also, each time that happened was after the halving. This time, price broke above the 0.786 prior to the halving, and you can see that it has been consolidating the longest period since it has been, I just like to know these things myself, for 300 and over a year. The previous time that it had consolidated the most was over here, and that was for a period of roughly, we'll call it 4 months, 120 days. So lots of changing behavior, nature of the 4-year cycle, if you're able to see it. And again, we just pointed out these things that are very, very, very clear. Now that hasn't, I'm going to come back to that in 1 second. I'm coming back to this in 2 seconds. I'm going to come back to that in 3 seconds. I'm trying to work my way over to here. Nothing has changed. Starting in it was December 2021 or January 2022. Right here, we put work out on the public side of the channel talking about Bitcoin was undergoing S-curve adoption. It has 3 phases: the hype phase, the facing reality, and the next phase would be the ultimate market opportunity. We've now jumped what's called the chasm in adoption into the ultimate market opportunity. You see it through the participants. Obviously, Wall Street has entered the picture. We now have spot ETFs. We now have lots of corporates taking a Bitcoin treasury. The whole nature of the game has changed. Retail is irrelevant. I know that. Listen, you're an early adopter. We're into late majority now. It's so early, it's ridiculous, but you're an early adopter, and retail mattered up until now. It's kind of like in the movie The Facebook, where they're like, listen, Mark, what they want you to do when they have that that sushi dinner in New York City, and where the most pivotal change in Facebook was made. Drop just Facebook. It's cleaner. But he also told him, listen, what they want you to do is take this beautiful thing you've built, hand it over to them, and say, thanks, son. Have a nice day. You can't let them do that. In this case, Bitcoin is permissionless. You don't get to decide. Yeah, you can run a node, you could vote, but it's a permissionless network. And at this stage of adoption, we have big players entering the field. What I call retail this time around is when you see these corporates that are buying $5 million, $10 million, $20 million, $50 million worth of, and it happens all the time, repeatedly. We market all the time. And that's the new retail. And then you have the bigger players. Sailor last week, another $2 billion. We're eventually going to work our way towards nation state adoption. The old G Bitcoiners played that out. The innovators played that out a long time ago. And yes, it seems that we're on the verge. There are bigger things happening. This pullback might have to do with the pullback that we're seeing in TradFi. I would think that's what it has to do with. It also could have to do with expectations upon the election that immediately a Bitcoin reserve was going to be announced. There seems to be higher priorities in play. Obviously, Doge is a high priority. Trying to gut out government fraud and gloat and spending, which is fraudulent. We're looking at, of course, trade agreements trying to be worked out. Trade agreements seem to be of a much higher priority. And then, of course, that's why the tariffs are obviously in play right now. And then after that, we're seeing this talk of it's time to audit Fort Knox. If you look at the COMEX, what's happening with deliveries right now, something incredibly unusual is happening. All of the gold that the U.S. has lent out is being rehypothecated home. And that's rehypothecated. It was lent out, rehypothecated, and now it's being called home. And they're going to audit Fort Knox. The gold is going to be there, and it's going to put the U.S. in an even greater bargaining power as they work out these new trade agreements. After all that is done, likely what happens is the U.S. Treasury, there's speculation that they're going to revalue their gold holdings, like basically just print money out of thin air. They're not printing it. They're just going to make it appear out of thin air. And then there's the potential that money is used to buy Bitcoin. There is like nation state FOMO could happen. A lot of people were expecting it to happen sooner, but everything is thus far right on time. And this right here is really healthy. This is what I want to focus on. I told you how to come right back to this. I was talking about this is why we were trading at 103,000. And I was saying if we can maintain this current channel that we're in, like not thinking that we're anywhere close to entering into a blow off. By the way, I think that a lot of people were looking for a left translated cycle as we made the new all-time high prior to the halving. Absolutely not, never was. And I do believe that the high on Bitcoin is going to occur a lot closer to the 2028 halving than the 2024. I do not think this was the high. I do think that between here and to monetary policy aligning, the next stage of the Fed cycle, in my belief, is going to be you see the Fed pause QT and then begin organic balance sheet expansion. If you just come out and you look at this with me right here, you could see the last time the blood indicator, this is S&P 500, you have US 3 months over high yield credit. And you can see the last time that it crossed the 100-week SMA, this was in July 2019. It was 3 months later, 2.5 months later, that you saw the Fed stop QT and begin that balance sheet expansion. When that happened, risk ran hard. Equities much harder, 22% on the NASDAQ, 15% on the S&P 500. I do believe that's what happens next. And when that happens, I do believe that it is highly favorable to risk. Bitcoin will be included in that. That's likely around the time you see things like the Ethereum Bitcoin cross bottom. But between now and then, last time that happened, it took 2.5 months in order for things to quote unquote break. We don't know how long it takes this time, and we don't know what the PA is like between now and then. I would expect, after seeing this occur over here, we were watching this structural trend line over here. And you could see, let me come back to the daily for 1 second. You could see that 1, 2, 3 touches to it. As long as it held this consolidation off of the massive leg up after the election was very bullish. We were all prepared if this broke $94,000, right? That at that point, the drawdown would expectedly be greater and the duration could be longer. That's currently where we're in now. Everyone should have been aware of this, and whether or not you were taking action, whether or not you were like CTM, those who trade both sides and looking to go ahead and initiate short positions. Bitcoin, Ethereum, Cardano, or if you're buy side only and you just have that awareness and expectation, buy side only, obviously you're out of the market. Or if you're a hodler, and for your hodl position, by the way, Bitcoin bull runs exiting just below that break, that we didn't have a choice. This is mechanical. So but still out of the market in a position of power. Is this a good time to dollar cost average? Is this a good time to dollar cost average right now and look for things like if you're targeting 7 figures on Bitcoin, which I think that we all are, and I don't think that it stops there. If you're targeting 7 figures on Bitcoin, if it prices at 83,000, does it matter if you're buying $20,000, $30,000 higher or lower? It really doesn't matter at all. The one issue and problem with that is that we were all looking for $100,000 Bitcoin, and we were looking for that much sooner, and it took a lot longer than we expected. We all thought that was going to happen 2021, and it took to 2025, 4 years later. So if you're talking about when you expect 1 million Bitcoin to happen, and I have my ideas about when that's happening. I'll share that with you in 1 second. Before we do that, let's continue over here talking about the current state of the situation that we're in. If you go back 4 years, right, and you come back to February 2021, and we're in March 1st, 2021, and then you come to today, and you can say, well, Bitcoin's up 70%, which is like 16% a year. And 70%, that's good. Wait, 70% in 4 years? That's not really that good. That doesn't meet my expectations. CTM getting it done. We look for 70% a year. 70% in 4 years. Look, I get it. If you're like, I'm a hodler, I'm looking for 7 figures, but look, I hope that 7 figures comes sooner than later. And to give you a bit of perspective of when I imagine that happens, right? I imagine if I had to place a bet, I would say that the highest probability of that happening is by January 2031. Or maybe February 2021. Now, I think it happens well before then, because this is like price ever since 2017. It spends the least amount of time below that highlighted line. That could change. I think adoption's increasing. The rate of adoption in users outpacing the internet. In 3 years from now, the amount of users on the network is expected to be threefold. But more importantly, the amount of money that each user is spending on the network is growing dramatically. And I expect, as under other S-curve adoption, that we're actually into the ultimate market opportunity by that period. I expect that it happens sooner, but it could also happen later. And you can see this low line down over here. And could it happen by somewhere around, hopefully, by 2034? Yeah, it could. And you know what? I mean, what's the best way that you could spend your time and talents right now? All right, let's continue. I thought this would be very, very healthy. I'm going to go ahead now and say, listen, I'm going to just use the high to the high here. And this is extraordinarily healthy. The longer we could stay in any type of price action like this and see this drift up with this like upwards accumulation happening is way better than seeing any type of fast appreciation of price, which ultimately is not going to is going to end in a steeper and bigger drawdown. We like this type of price action. We have this channel over here. Let me zoom out so you can see it, right? We have, I don't like this dot over here. Let me just get rid of this dot. And by the way, it's good to see you all. I'm glad you are here. It is good that you're here. if we were to break down outside of this channel, that would be concerning to me. Here's a retest of the least recent breakout, horizontal retest. Below 73,000, that would be a big technical break. Obviously, we saw the first break at 94,000. This would be a second breakdown. We don't want to see it. Now, in regards to this and this, maybe it's this slide. Well, hold on. I told you, if we broke down over into here, that would be 72. Okay, that's also 72. That's horizontal. I don't like horizontal. It's rarely ever correct. I like this slightly downward sloping trend line I have over here on my chicken scratch. By the way, what do you think of this? This is a massive breakdown. We're here. It's Friday. Let me go ahead. This angle that I have here, this upward sloping dotted trend line, you see the touches from February to March. It is different than the structure of Bitcoin. And the structure of Bitcoin goes back all the way, not just over to 2013 for the last 12 years. This structure also is in play down over here. We don't need it. This is where I started. And what's really neat about this structure over here is you can see that, for example, you see the March and April top tagged. You see the October and November top tagged. You see the bottom. We'll look at these touches over here on the bottom. And you see the very bottom over here in November and December. It's pretty cool. It's the structure of Bitcoin. And that structure, like, we don't want to break this area, 65. So this is so variable. I'm just trying to give you all of the cheats, right? We don't want to lose this area that we've tested twice since 2024. If we're breaking below there, it probably gets bad. And then ultimately, I have this highlighted one. This comes off of the bottom. Like, could you imagine a world where this wick over here from August, the Japanese yen unwind, is taken out? That would be brutal for a lot of participants, heavily leveraged in that area. That's a bit of a horizontal. Look at that. You can see from March 2022, touched over here, tested over here. If that were taken out, you could see a world where we come in and test this and it holds. The thing is, if all that's happening, it's bananas, just not bananas as Raul told you we were headed for the last 6 months. It's bananas, like slipping on a banana peel. And it would be terrible, but structure wouldn't be broken. And it probably would mean that we are actually headed towards a significantly higher price this cycle before 2028. What about in a crisis? The last crisis, we went down 62%. This would be 56% and sliding upwards. That seems reasonable. I hope that doesn't break. I hope that doesn't break. It could break. But I would expect even during a crisis, don't forget the last crisis included the entire population of the world being locked down. It also included other fun things like the BitMEX liquidation feedback loop, bringing the price down further than likely it should have. I think that's a pretty safe bet. And I think if that's happening, the bull market is still intact. Yep, all that is true. I do believe that. And I'm just trying to get a closer read on that. So, now I have this line over here. Banana peel zone. And this is the dotted line. And you can see, again, the structure that it provides. It's a different structure. It's structure. I'm showing you all the touches, right? And it's structure. It's just different. I like this structure for breakdowns. And I do anyway. And you can see that if I take this one over here, I tried off the top over there, and you could see that this is where we bottomed, and then we broke down. And after we broke down, do you see how the lower structure has held? We just pierced it. If we close below that, that's a bad sign, in my opinion, a very bad sign. And then that brings in, I didn't like that horizontal. I like this downward sloping one. And you can see the downward sloping one, why it's there. And it's just because it's more accurate than, look at these touches are insane, than the horizontal. So below 70,000, that would be very worrisome for us. And I just want to take a look then and see what that means. And before I do, I want to see what else I might want to have shown you. I'll come back to this slide a little later. And so we said 70,000. So you could see 70,000 is protecting this area that we do not want to lose. So that's pretty good. I'd be happy about that. I like the confluence. So I could say, all right, 70,000, we don't want to see break. If it breaks, then we have this little bit of wiggle room. Losing that would be bad news bears, and that likely brings up a very, very bad test. Now, there is the case that some people think this is a Y-cliff accumulation. Prior to the break of this, I would say that you can make the case that this was the spring and we were seeing Wyckoff accumulation occur. On the breakdown over here, I do not think so whatsoever anymore. Now, it is possible that we see this wick. Guys, just pause in 1 second. What's happening inside TradFi right now is extremely related to what's happening in Bitcoin. You can see both markets correcting at the same time. We saw this Wednesday, NVIDIA's earnings, and they were okay. The best part about it was the projection, like 6 to 9 months out, expecting the revenue to increase sharply on the new product launch. But it wasn't like anything that was going to stop the bleeding that was occurring. Actually, yesterday's price action sent off a lot further of CTA selling into next week. And we have seen so far any bounces being sold all week long. Now, today's Friday. Maybe, like, by the way, you can see over here, this is the deep seek low. And that was taken out yesterday. Look where we bounced into so far today, right into that deep seek low. That broken wick was now tested as resistance. You could see my trend line. Cabby, we're giving a master class in TA so far all morning. The 20 minutes we've been live has been nothing more than a master class in TA. So, and it continues right now. So you could see that has been broken. We need to regain that level on the NASDAQ in order for any type of hope of a move. You could see this line over here. Now this one's red on the way down after it was broken. You could see that we tested up here twice. So I'll just make this red here right now. We should now change that to red. See, I don't want to, whenever I say that, I have to do it. It's like, all right. So we need to regain this area at the very least for any meaningful repair to happen. And before that happens, we need to gain above here. So NASDAQ is under pressure. Horizontal trend line. All lines should be trend lines. This is one case where we have an actual horizontal line in play. It's Friday. Zelensky's coming to the White House to make a minerals deal. Maybe markets are a little positive today. I didn't see the PCE. What was the PCE today? In line as expected, so nothing. President Trump speaking has been moving markets for the first time in 4 years. I spend my time on the news on Forex Factory to see what is actually moving markets when Trump is speaking. You either make a deal or we're out. Sounds like someone's in a position of power and someone is not. On stocks, we are completely out on the sidelines in a massive position of power, waiting for the next time to attack. You could see that. I mean, Rico, whether or not, and I can't imagine a better edge, especially long term, but like the daily analysis we do alone is worthy of your time. You should be here with us. Here's gold, right at 28,450 off all-time. The dollar here, we are currently long the dollar, and a close above here sends us back long and back in the trend in place. And also with the tariffs currently in play, makes a lot of sense to me. We're going to keep it both ways because ultimately there's going to be a big move on the dollar. And you can see coming back to 2016, look at Bitcoin over here. The dollar is rising. Look, the dollar is rising. It's consolidating, but it's rising. It's higher than where it starts in the green box. And Bitcoin is rounding up off the bottom. When the dollar breaks down, Bitcoin really runs. You could see a similar situation here. This is the bear market. During the bear market, dollar rises sharply. This is the bear market. During the bear market, dollar rises sharply. Then dollar begins its consolidation. It's higher than when it began. Bitcoin rounding bottom. When this eventually ends, and the reason I'm tracking the dollar so hard right now is because it could end after what is actually a Mar-a-Lago treaty. It could end after these trade negotiations come to an end or before. And we just want to stay on the right side after the dollar does finish appreciation. And this time you could see that from the red zone, price actually ended up higher. It's possible price ends up higher than the red zone. It's also possible this was just an overextended move and price is consolidating and actually higher than where it started. When the dollar breaks down, though, is expectations that Bitcoin is really gonna begin its run. That's why we're tracking the dollar so hard at this particular juncture in the market. We continue to see 10-year, which is probably funny, one of the best instruments we track as far as being on the right side, and we're currently bid on bonds, and that's extending downwards. And then here's just another view of the dollar and US dollar, Japanese yen. So nothing to add today on all of that. And we can come back over here to Bitcoin. We are looking right now after breaking down from that support. Our expectations are that the drawdown was going to be obviously more severe. It's already doubled since. So we're drawn down 28%. This was another 16% after breaking. And also that likely the amount of time it will take to repair is going to be longer. So a lot of people looking for that sharp move up. Would love for it to happen. We need to see two things like for any type of repair to take place. Number one would be getting above this simple trend line. Number two, that broken support needs to be cleared. So right now we're looking at a much higher Bitcoin. Let's just call it somewhere. Let's call it 98,000. We'll be exact as we get closer to it. And you can see from our Bitcoin bull run, our exit was 92. Usually, one of two things happens on Bitcoin bull runs. Like I'm a hodler. I don't trade. Whoops. I'm a hodler. I don't trade. Well, okay. But know when to be in the market and when out, because you're not going to likely do better by just hodling, right? And knowing when to be out of the market is absolutely price. Who wants to have a 76% drawdown that you then need 150% gain to get back to even? Wouldn't you rather preserve your purchasing power and then make 150% gain on the upside? I know I would. Ethereum, it did take, I heard on Coinbase took out the wick from the Japanese yen unwind. I don't know. I haven't confirmed that. But you could see, and we were watching, we were watching Ethereum in what was a bullish continuation pattern until it broke down. Wick down, came up, and then started forming this bearish flag over here. We were tracking that. It broke the flag. Then we were watching to see if it was going to take out the wick. It has taken out the wick. Question remains on the bounce up over here, as we saw a massive amount of liquidations occur today within crypto, both on the long side and short side, is whether or not ultimately this wick gets taken out. Again, some people believe it already did. I'm waiting for it. I'm watching for it. Again, right now, equities under strong pressure. Seasonalities don't line up. We have obviously people needing to tax laws harvest coming into tax season. And also, right now we're seeing a bunch of selling, forced selling from CTAs hitting the market all of next week. I want to say it is. It's $40 billion and roughly $10 to $15 billion of buybacks, which counteracts some of it. But you're still looking at $25 to $30 billion of selling coming from CTAs on the indexes next week. And look, that's a tough nut to. I mean, we've seen price be able to go the other way, but that would mean retail and hedge funds are coming in, and retail just sold a bunch of equities on Monday. It doesn't look like they're ready to buy the dip. Who's the buyer? Could it be hedge fund? Maybe. Watch the technicals and follow the technicals. Moving backwards over here, a lot of people we were saying earlier in the week, look at the divergence taking place as the RSI was making a higher low and price was making a lower low. And I said, do not fade that price action. Do not try to buy the dip. And then you could see price making significantly lower low over there. We mechanically, for those that are trading both sides, short the corn, short Ethereum, and short Cardano. These, by the way, are looking at all-time highs intra-trade. We normally, before taking profit, you could look back at that Cardano trade over there. So although this took 138% on the long side, it was 259% into profit. We always give back, Bitcoin the least, but we always give back profit before locking in. And you could see that occur over here. But on a closing trade basis, from the time you open it to close it, you can see right now barely off the all-time high and getting close to back roaring in the bliss. There's something that I wanted to share with you all regarding Ethereum. Is that right? Bruh, could you check for me? It's gonna say 140, not 150. Probably, maybe it says 150. Oh my gosh! Thank you, Rodrigo. A 233% gain. Mike Rodrigo. Waterley. That is like just jumping back to the Bitcoin bull runs somewhere. So you're in a bear market. The one doesn't show the current price. You're in a bear market. You draw down 76%. You need a 233% gain just in price. So basically, the whole run up plus is completely wasted on you. Man, preserving purchasing power is like nothing else. We want to we've had a fun session. Thanks for being here. Those that have joined in the public, please on your way out, smash the like button. We got a little bit of work to do though. So even though it's Friday, we're always working. We're always heads down, putting the work in. And right now, I just want to take a look at some thoughts we've been taking a look at on Ethereum. So if you look, and Brownie Brown has proposed, if you were to let me start it so everyone can understand. You look at Ethereum, it looks nice. We're not doing that. We have S2 on, and you look at Ethereum's results and you're like, oh, that's pretty good. Like 177 million. Let's round up. 178 million% with a 38% drawdown. Many people would be really into something like that. I'm going to just jump down over here. I appreciate the love. Thank you for the thumbs down. I really appreciate your time and interaction. Last 5 years, 38% drawdown, 20,000% gain. Like, there's nothing special about the price action in the last 5 years. That's fine. That's fantastic. And actually poorly modeled. When I say poorly modeled, I mean like not well modeled. We could do better. First, Brownie Brown was saying, listen, like the the ST2 filter, that likely should have been used early on and shouldn't be used anymore. And you could see that actually we're not giving up any net gain by doing that. Oh. Sorry, I hope why you could see the returns while I was doing that. This is actually, I love, so Rico, we often talk about Bitcoin is the rising tide that lifts all boats. And as we go through this exercise here, that's ultimately what we're going to see. So it's really, really neat that you said that. But let me continue. By taking off the RS2 filter, you can see the drawdown is massively reduced. Now, why most people would be comfortable with that type of return and a 38% drawdown, that is way too much for CTM. So this is well within the means that we like. And you can see that if you were to go back and you were to go all like further back in history, we'll go back to the creation of Ethereum and you keep the ST2 on, you have still that 20% drawdown and 134 million. And I just want to see putting it back on, the overall profit is diminished. But in relation to the amount of drawdown that's diminished, of course, it makes perfect sense. Then Brownie Brown was like, no, we could do better than that. And he proposed that if you were to go ahead and actually use the ST2 filter when the Bitcoin bull market is not in the market, and when it is in the market, take off the filter, then you could see that, look, instead of 133, the profit almost doubles. And the drawdown's actually reduced from 20% to 17%. So that is like, wow, very creative thinking. And then it was proposed, well, maybe that what we need to do is look at an average to range, but instead of price, like percentage based. So that's where I left off yesterday, and I pulled up these ATRs that are, by the way, for those that have been here forever, this is the original CTM 2.0, been forward testing since the summer of 2022, and the results are absolutely massive. That's from 2020, come back to 2016. And I mean, 38 million and a 35% drawdown. That's our original work. It's pretty fantastic. And it's been a contender in recent PA. This is CTM V2. So this is built on top of CTM 2.0. And so I took a look at adding two types of ATR percentages. And I was like, okay, let me find out the relationship here. Maybe that provides a better way to know when to use the ST1 and the ST2. And then, so the next thing I did was I just put this template next to the Bitcoin bull runs. And I wanted to see the relationship to find out, number one, is a percentage-based ATR better? And if it is, could it be utilized for all assets? And then I went about it. And the next thing I needed to prove to myself was this. So I wanted to see in a bear market, like when ST2 is not being used. Let me just come back to where I was. So these are the trades that are taking place on 103A, and this is without the RS2 filter, which Brownie Brown is suggesting should be only not used when we're in a Bitcoin bull market, the rising tide that lifts all boats. So I went ahead and I'm clicking this on because we're in a bear market now. And I wanted to see the amount of trades that it reduces. And look at that. Look at the amount of trades that it's reducing. Like a significant amount. So then I was like, all right. And I don't even think that's the one, but maybe it is. Why not? Let me just check out this period over here. So again, I'm just going to look for and see what Brownie Brown is offering here when in the bear market, these trades that are occurring right here using the RS2. And in this case, not one trade is reduced. Okay. Let's come back. We're not using the Bitcoin bull runs over there. This is the bear market though. So we'll start over here. And now I'm going to go ahead and take it off. Oh, sorry, y'all. I think we just looked at that one. Let's look at this one now. So this is off during the bear market. This is what I was looking at earlier, maybe. This is on during the bear market. You could see a lot of these trades over here being reduced, or all of those trades being reduced. So why that's happening, like over here, what's happening with the ATR? And so my first conclusion, by the way, and I'm trying this live. I did see, you can see here, you already, I'm turning it on in the bear market. Let me confirm that's a bear market. It is. That's the bear market. We're out of the Bitcoin bull runs. By turning it on, you can see the trades reduced. I mean, what Brownie Brown is proposing here is like so creative. And I guess we're verifying and confirming that not only does it backtest well, you could see it in action. It makes a lot of sense. And is it possible that, like when there's a cross down on the ATR, is that not the time to use it? Maybe when the ATR is, but ultimately, I'm thinking, what does it even matter? Like maybe there's something here with the ATR, or a way to customize ATR percentage based in order to get it to be efficient. But the bull of all bulls, the rising tide that lifts all boats, seems to provide that. So the next thing to check up, so like what I'm doing is, the ATR is interesting, but the Bitcoin bull runs, the rising tide that lifts all boats, when it's in a bull market, seems to be the trigger to say, all right, now let go of the filter that's preventing these bad quote unquote bad entries, and allow more room to the upside. Don't let the ST2 prevent any longs here. And so I wonder on Solana if this is also going to make some sense over here, or provide some confluence. So that's the next thing for me to check out. I'll leave these up on the chart. I'll just do this for myself, like to make it easier so that it's neater. But I'll leave it up on the chart, and then we'll find out whether or not we could just use the Bitcoin bull runs as a way to toggle on and off the ST2, or, and by the way, ST2 only affects long trades, or if and see off of, does this work on Solana next? That's an important one. So that's what the game plan is coming into Monday. Yeah, we could take a look at what's going on with Litecoin. I mean, we talked about if you were buying, holding Bitcoin exactly 4 years right now, 70% return. Last night it was a 60% return, 15% a year, 17.5% a year. Is that what you're like? Litecoin looks to me like this is that's a hard one. So I mean, it's a consolidation, and it's a range that I don't really want to be caught in. Now, like this is a big move. Like went up 95% in March. It's a big move, right? And if you were trading this on a small time, here's just a CTM 1.0, right? And you have the breakout here. And if you played the breakout over there, I guess I like the yellow, the contrast. So if your stop loss is like this is stopped out over here. So your entry, your stop loss. After the stop loss, you probably move this like this, right? Entry down over here. And stop loss is then moved like that. So, I mean, the trade has passed. Like this is CTM 1.0. This is the way that, I'm just going back further now. Let's pretend that you did that over here. You had a breakout. Obviously, your stop would have never come into question. But whether or not you took that trade, and you could see that would actually be an exit. Just an exit right over here. I'm trying to see how chopped up you would have been if you were doing this. So next entry, right? It didn't go anywhere. It's a 50% gain. I don't think you would hit the stop loss because I think that you would have been able to take profit, right? Take a 20% profit, move along. Here's next entry. Next entry occurs right over here. Stop loss never hit. I don't know if you would have taken profit here, like break even 10%. Stop loss wasn't hit, or if you held it all the way through. But this thing really went up far, a few 100%. This was the altcoin season though, right? And you could see that you would have gotten into it. Okay, finally a loss. Like, here's an area. Let's say you get in, and that's late. I do think that this is more of an underbelly entry, and you could see that you would have been fine. But let's say your TA was bad. You weren't up to speed, and you took an entry over here, and that might be stopped out. Like that might have been a loss, or you might have been able to manage that into a break even. That's the only questionable one I see. And then if you come down further, we just covered all those. So I think through CTM 1.0 TA and trade management, or I should say like CTM 1.1, right? Well, we've covered the last year in class regularly as what is the proper way to go about it, including stop loss and whatnot. Then I think that you could outperform on Litecoin, but I don't see the pull towards Litecoin overall. I hope that's helpful. All right, everyone. It looks like the ETF selling is dying out a little bit. We saw massive outflows, and then the last 2 days So a massive 1.1 billion, 750 million, 275 million. So for now, but as price goes, so do the flows of the ETFs. Everyone, have a beautiful, beautiful weekend. God bless you. And I'll see you all on Monday.